Okay, welcome Christy. Welcome everyone to Bamboo Wealth. Financial planning does matter. Today we have a special guest, Christy Zanios, and we'll be discussing income protection policy, which is very important in the current economic environment. First of all, how are you, Christy?
I'm really well, thanks. How are you?
That's good, wonderful. I'd like to sort of start by, if you can give us a bit of background about yourself, how you became a BDM, and also what you currently do and who you work for today.
Yeah. So just to go back, I've come from Monash University, did a finance degree, and after that I've got myself into paraplanning, and I've been with Onepath now for about 5 years. So I'm a on the road BDM. We're representing Onepath / Zurich. My clients are financial advisors, and I try to help them with their businesses, help them grow, and basically look after them from a sales perspective, and any process, anything they might need from that side of things.
Okay, that's wonderful. Yes, you do play an invaluable role. We do rely on BDMs when it comes to things like claims and also applications and understanding the premiums. I wanted to start off asking you about what is income protection and why is it actually important to consider for clients instead of relying on government benefits, as an example.
Yeah, so income protection is a way to protect your income if you're sick or injured. So basically, it can insure up to roughly 75 or sometimes 80% of your pre-disability income. So it ensures that basically you can maintain some, your lifestyle basically as you knew it pre-disability or pre-sickness. Why it's better than government benefits is government benefits can be quite light on. So there's no way that, you'd be able to sustain, your level of life under government benefits. Probably it ensures that you have, the ability to sustain your life pre your sickness or injury, which government benefits wouldn't allow you to do.
Yes, that's a good point. As a certified financial planner, I constantly show clients that the fact that government benefits generally represent 25% of an average salary, which is about $1,300 according to the Australian Bureau of Statistics. So it certainly does not replace your income. It's there to support your basic necessities to continue your lifestyle. So income protection is imperative in that process. Also, who is income protection for and why is it important?
I think that income protection is for everyone that is employed, has a job, and wants to protect that in case anything happens. It's very important, especially not only for people that have families and dependents, but also, even for singles. You think to yourself, if something did happen to you where you can never work again, who's going to look after you? Who's going to pay your bills? Who's going to pay your mortgage? How are you going to sustain any sort of life that you knew, pre that disability? So it's very important, and it's something that everyone should definitely consider and speak to their financial advisor about.
Okay. The other important thing that a lot of people are not familiar with, which I've been speaking to clients on a regular basis, is that income protection is 100% tax deductible. So
correct,
essence,
yes.
the government is actually assisting you to look after your income in the event of any illness or accident. So when we do talk to our clients about that, they sort of realise it's probably one of the most important types of insurance that they need. Also, why should clients actually consider retail income protection policies when their current employer may provide them a policy?
I think the retail policies that are on offer are a lot more comprehensive, and in some cases also easier to claim from a claims perspective. So a lot of the inbuilt income protection policies have a restricted benefit period. So for example, they might have only 2-year benefit period. Also, the percentage that they offer, usually it's decreasing and unit based. So usually with every year that you have something like that built in some policies, it decreases every year. So by the time you need to claim, let's say you've had it for 10 years, it's going to be a lot less than what you anticipated. With retail cover, what you can do is you can lock it in, and let's say even if you claim in 10 years time, you're going to basically be get that guaranteed amount, or you're going to get basically what your pre-disability income was prior to claim. So it gives you that assurance, and you basically, you're underwritten at time of application. So it means you know exactly what you're getting at time of claim. There's no surprises and nothing hidden there.
Yeah, speaking of surprises, we can see that a lot of people who go into retirement, they actually got a bit of debt. So someone who's 1 or 2 years away from retirement, we find that they've still got some debt. And then they look at their policies through their super or through their employer, and they realise, as you just mentioned, it's a decreasing amount. So the debt that they want to replace is far greater than the actual level of life cover that they actually have. So again, this is something that a lot of clients are not really familiar with. It's important to bring to their attention. Now, how can income protection policies be paid? What are the benefits and disadvantages of each method?
How can it be paid, did you say?
That's correct, yeah.
Yeah, so you can pay it personally out of your own pocket, and then you get 75% tax deduction.
Yep.
Now, if for some clients that can be an issue in terms of cash flow, so you've also got the opportunity to fund it through your super, or have a split policy where some is funded through your super, some is funded personally. So that way, it's not as much of a burden on your cash flow.
Okay, wonderful. And again, this is really important in the current environment, isn't it? When people are sort of, and when you have economic downturn, people's cash flow does get a little bit tight, and they have to consider still protecting their family. And unfortunately, some clients compromise that protection, and it's important to give them the opportunity to consider both options as you just described. Also,
that's true.
Why is income protection a bit more expensive than other policies from your experience?
Income protection is quite expensive because it is quite claimed upon. We have quite a high claims rate on people claiming on income protection. Also with income protection, a lot of people that do go on claim, obviously depending on why, they do tend to stay on claim for quite a long period of time. They could actually stay, a lot of them do stay till age 65, and that puts on a big burden from a sustainability point of view on the insurance company, which is why it's quite expensive.
Yeah. Now, also, obviously, everyone is aware worldwide that the current pandemic of coronavirus is having an impact on a lot of people's lives, and even insurance policies. With income protection policies, are individuals covered under a pandemic situation or the coronavirus?
So that would be, if they did contract coronavirus, and let's say they saw out their waiting period, then we would start paying them, let's say what their benefit is. So let's say 75 or 80% of their of their pre-disability income, and depending on how long they are unwell for, we would pay them every month that amount. So definitely very important in times of, especially times like this where this has had such a big impact. It's very important policy to consider. Okay,
but with new policies, obviously that may be an exclusion. Is that correct?
Sorry, repeat that for me.
With new policies, if a client takes that new policy today, pandemic would be coronavirus would be excluded. Would that be the current situation?
No. From my understanding, I think we haven't released anything to say that we wouldn't, but it's still very early days, and this is changing every day. So for now I'm not sure, but because it keeps on evolving and changing, and so I'm not too sure. I can't give you a certain answer on that. Yeah,
that's fair enough. And also, in selecting an income protection policy, can you go through some features that clients should consider before selecting a policy?
Yeah. What I would definitely consider is the benefit period is quite important. So this means how long are we actually going to pay you for? So the most common one would be to age 65, which means that if you did have something that was quite, had a big impact on your life and you couldn't work again, at least it takes you through to retirement age. And then you can probably access, let's say, other benefits after that, via the government or so forth. Also, the waiting period is quite important. So the waiting period means how long do you have to wait before the payments start kicking in. So the most common one would be 30 days. Others might do 90. Now, it depends. 30 days, obviously, the less waiting you have to do, the more expensive it is. So they're probably the main features. We've got different other features and benefits that are built into the product, but it really depends. I mean, I could be here for a long time going through all the features and
Oh, of course,
benefits,
yeah.
but benefit period and waiting period, yeah, they're probably one of the most, important things to consider in terms of what's right for you.
Okay. Now, also, what are the benefits of clients actually sitting down and talking about their generally insurance, but more particular income protection insurance with a financial planner to make sure that they get the correct policy, correct features that suits their individual needs?
Yeah, I think it's very important to sit down with a financial advisor because he'll go through your situation, and he'll say what you need. What are your future needs as well? Do you have kids that you want to send through like private education? Do you have a mortgage? Do you have, it really depends on, what your needs are. And a financial planner can actually help you, go through your wants, your needs, and sort of map out how you're going to get there. And if something were to stop you, if there was an unforeseen illness or injury, there are ways to protect that and ensure that, you still get to the end outcome. So definitely very important to talk to a financial advisor and see how they can help you get to, those goals.
Okay, wonderful. Now, income protection generally is taken out to maintain the person's lifestyle, their living expenses. But how are they used for other type of policies like total permanent disability and mainly total permanent disability and also trauma? How are they used in that, combined together?
So I guess every policy has its part to play. So trauma, for example, would give you a lump sum if you suffered. For example, our most common case, the most common reason that people claim is due to like cancer, heart attack, stroke. They're probably the three main reasons. So basically, you might have, let's say, for example, $100,000 of trauma. What that would allow you to do, maybe take some time off work, maybe seek alternative treatments. Maybe you found there's a new treatment for the kind of cancer that you have in the US. It'll give you the resources and funds to be able to go and explore that kind of treatment. It will allow you to have some breathing space in terms of paying your bills and your mortgage. Maybe going on a holiday because, you just need to de-stress and, I guess take some time out because you've been through such a traumatic event. So it gives you that flexibility, but in a lump sum. And then you've got obviously your life cover if you, you're diagnosed as being terminally ill, you've got less than 24 months to live or you die. And then total and permanent disability if you are unable to work in your basically in your own occupation or any occupation that you're suited to by trade, experience and qualifications as well. So, and that's a lump sum as well. So they've all got their different what the purposes that they serve.
Okay. One thing that we do come across is people think that their superannuation funds, particularly default superannuation funds, they've got enough insurance into their super. So in particular, thinking about income protection policy, what would be some significant difference between taking a retail income protection policy compared to a default superannuation income protection policy that's via their super?
Sorry, so the differences between IP in your super,
your employer or your default insurance policy versus a retail policy outside.
Look, the policies that are found underneath super, like your default levels of cover, first of all, the levels of cover are a lot less than probably what you need. The second thing to consider is to claim it can be harder. There's no underwriting. So usually a lot of these policies have pre-existing clauses. So if you've got something wrong with you, let's say when you took it out or when the default, when you started, let's say your employee started contributing at time of claim, basically there's an exclusion there. So you probably wouldn't be able to get paid if you had you had something, let's say, that was wrong. Correct. Also, some of the policies, depending, they could be unit-based decreasing. So it means that every year you grow older, they're decreasing. So when you go to claim, it's not going to be what you thought it was going to be. And also with the income protection, a lot of the policies that I've seen are usually 2-year benefit periods. So after 2 years, that's it, payment stops. Whereas with us, you can do age 65 and I guess really, really protect, your needs and, your lifestyle. if something were to happen.
Okay, that's very important to know because there's a significant difference in features, benefits, and also payouts from what you've described.
Yeah.
Yeah. Is there anything else that you'd like to point out in relation to income protection policies that's currently happening in the marketplace or legislation?
The market, look, I think we have seen a substantial amount of claims, especially mental health is probably a big one now that we're seeing a lot of.
Okay.
But it's something that's ever so important. It's tax deductible. I would definitely recommend everyone to have a sit down with a financial advisor and basically, you know, see what they need, what kind of benefits they're looking for, because yeah, I mean, you don't want to be caught in a situation where something happens and you have to rely on the government, for example, to look after you. Super, super, super important. Can't stress that enough.
Yeah, okay. And just one thing I want to also clarify, just for our viewers as well, that the information that we're providing today is for general information. It's factual information. It's not specific financial planning advice. And that if you want financial planning advice, you should seek financial planning advice. Come and see us. Make an appointment and we'll be able to assess your individual circumstances. Christy, look, thank you very much for coming in with us and sharing your knowledge and your wisdom. And hopefully we'd like to see you again in another topic that is closer to your heart with insurances, because you obviously support advisors on different levels of insurances, not just income protection. So hopefully we can have you back on the show. And for everyone out there, take care of yourself in the current environment. Look after yourself and your family and take precaution to stay safe. And we'll like to see you again in Bamboo Financial Planning Matters. Thank you very much. Thanks, Christy.
Thanks so much.
Thank you.
Thanks
Bye-bye.
again. Cheers.
Okay.
Bye.